Hey, ladies and gentlemen, in this week's video, we are going to look at a dramatic fall in the share price of Mapletree Logistics Trust. Wait a minute. Did you say Mapletree Logistics Trust, one of the most premier REITs name that most investors have in their portfolio, most institutions have in their portfolio, who raise a lot of money in the funding of acquisitions, something like $3 billion in the last 3 or 4 years, when they embarked 3 to 4 acquisitions? Yes, that's Mapletree Logistics Trust. In today's video, we're going to show you how we at GCP Global were able to preempt this to our student investors, and as an investor, how you could have avoided this particular huge dramatic fall. So stay with us to the end. Gentlemen, this is the dramatic fall of Mapletree Logistics Trust, okay, when it actually hit a high of 216 in August of last year, and that's where we have warned in our REITs classes that it's time to be trimming the stock in your portfolio. For those student investors who attended our classes, you notice that in our classes, we do warn of run up in share prices of some of the REITs. We tell you essentially when you should be trimming, what are the reasons and what are the basis you should be considering before you trim those stocks. And guess and see what happens. Mapletree Logistics Trust, since our warning dent, has fallen from 216 to the end of the year, that's at 190. And from 190, just suddenly, in just 2 weeks, the share price, which ended at 190 at the end of the year, fell down to as low as 174, the low last week. Now, this is a woeful, almost 20% fall in just 6 months. Now, has there been precedence of such fall in MLT share price? Yes, of course, but those occurred in 2008 during the global financial crisis. Yes, that's because MLT was one of the earliest that was listed way back in 2004, and as well as during the COVID-19 pandemic sell-off. But you can see none has actually matched this steady decline in the share price throughout the second half of last year. Now, in today's video, I just want to share with you, because in our student investors program, subsequent to each lectures, we have actually students inquiring and emailing to us, and that's where we actually share with you or share with them what we have really shared in class, reiterate some of the key things again, and even take on new questions. So student investors who sign up for our week classes can continue to ask us questions. And one of the questions actually came from one of our UK clients, that's Mr. Adrian Fletcher, from who's currently residing in Thailand, beautiful Thailand. Okay, so once again, ladies and gentlemen, this video is more personal sharing, telling you exactly how we actually have been able to identify stocks before they actually fall, before they rise. This is not a recommendation. And as well to showcase to you essentially how GCP Global approach is in approaching REITs and preempting and preparing you against huge downfalls like what MLT has seen. So this letter came in from Mr. Adrian Fletcher, okay, and he says that way back in the 22nd of December, that's actually after our November class, he says that on Saturday, you made a passing but interesting observations that big names REITs like CapitaLand and Mapletree might not continue to dominate the S-REIT market. Perhaps we should not always simply trust in the REITs. Right, so it's a very good observation, Adrian, and this was my reply way back in 2 months ago, where I said, "Hi, Adrian, being in the thick of things, that also mean that you are able to pick up the nuances and the changes, major or minor in REITs, because they can give the sagacious REIT investors like what we prepare our GCP Global students to be, for instance, at the opening class of this year, that means was last year, we warned that the top performers of 2019 and 2020 are unlikely to repeat, in 2022. And true enough, the top winners was Capo DC, Mapletree, Commercial Trust, Mapletree Logistic Trust. So what happened? In 2021, they actually were the worst performing. Okay. Now, one of the reasons we cited, in our endeavor is that for REITs, the phenomenon is very clear. We studied the last 20-year history, and yes, last year was 2021. It's a 20-year listing of the Singapore REIT market, having started way back in 2002. Okay, so revision to the mean is a state of affairs, right? And it's quite natural because if it doesn't, then as I've mentioned in my point 2 to Adrian, that is actually if they continue in just last year, then both MIT and Capital DC, which were big performers in 2020 and 2019, which we have highlighted that they are unlikely to repeat the fit in 2021. Okay, if they continue, then they will have doubled in just 3 years. Now, this fit is only seen once in the 20th history of the REIT market. That was actually from 9th of March 2009. Over the ensuing 3 years because of the rebound from the global financial crisis. Okay, then so when Capital DC actually hits 270, right? And it went out to as high as $3. We already told our investors to stay cautious, avoid, and stay away. Even though we reckon that they are still a good REIT name to own in a portfolio for the long term. Now, ladies and gentlemen, do understand that REITs, essentially the nature of it, because of its revision to mean as well, cannot continue to outperform. It's impossible. But the key metric that will help you to determine whether they will continue to outperform is the growth in DPU. And once again, do look at the GCP Global website. Our website details are there where we have an archive of our last 33 years of writings, illustrations, exemplifications, monthly writings. Yes, ladies and gentlemen, we have been teaching for the last 33 years. So do gauge us on our quality, our durability, resiliency, and the success, so to speak. Right. Now, let's move on, ladies and gentlemen. Now, Adrian went on to highlight a few important points, Mr. Adrian Fletcher, our UK student investor who is currently residing in Thailand. Now, clearly, what Adrian says is that even the best managers will not always get everything right. That's really true. You highlighted a possible recent mishap by CICT because of the earlier placement of the rights issue, or rather the institutional placement, where we highlighted in the classes that for them to be placing out after the shares have almost been down by 17%, it's probably one of the worst time ever. But guess what? Even the best REIT managers do that. Okay. Now, I also saw doubts expressed elsewhere, rightly or wrongly, about MLT, and true enough, Adrian has actually hit the nail on the so-called coffin. Okay, now my reply was that yes, Mr. Adrian Fletcher, sizing up REITs and their managers and sponsors are an evolutionary and constant task. Never assume that essentially that if they have been good like what Mapletree had been, never assume that their aims and aspirations have been connivance with minority shareholders in the past. It will continue to be the case in the future, right? And that's what at GCP Global, that's what we do year in, year out. And that's what we've been doing for the last 33 years. Okay, now Mr. Adrian Fletcher went on to highlight that I guess investors need to weigh up whether particular acquisition is indeed questionable, and two, whether this represents just a minor bump in the road or whether the management is going off seriously on the rails. If they are doing that, then ladies and gentlemen, this is where we warn you seriously in our classes, right? So what do we do at GCP Global to actually try to achieve that? We always like to listen to our managers during the lunches, dinners. These days not so much dinners because of COVID-19 clamdowns, to try to understand their side of the thoughts, their decision-making process. Now, please understand that REIT managers will always try to defend, what they have said, because really, is there an only alternative for them? But for you as the smart REIT investor is different, right? You need to really gauge exactly what they say. Does it make sense? Does it make sense in the light of the current market conditions? And what does it behold on the stock price in the future? Because remember, as REIT investors, ladies and gentlemen, you only make money if you are able to make capital gains, and two, continue to receive good, steady, and hopefully rising dividend. And of course, like Mr. Adrian Fletcher, if you are residing in the UK, or overseas, then there's an element of foreign exchange gain or loss. All right. So Mr. Fletcher actually ended up saying that your guidance on such issues in future classes will be greatly appreciated. And this is exactly what I replied. We take our endeavors to heart because we think that the trust that our student investors place in us as much as we place in the REIT managers must be continually earned, which is something that I love about Warren Buffett, because even though he is 92 or 93 years old this year, he still holds this as the core to his heart, as much as what we hold trust for our student investors, trust of the REITs or mistrust of the REITs, really, in the ensuing future. Okay, now the next two slides, I just want to show you some of the most laughable thing, that you probably will see, but this was actually shown and highlighted in the Mapletree Logistics Trust 8th annual general meeting just last week. It's quite laughable. Okay, so do enjoy a good laughter. And as usual, if you enjoy this particular video, do subscribe to our video, like and share, recommend a friend, then email us at gcpglobalsg@gmail.com, telling us your name, your contact details, and the name of your friend that you recommend, so that we can put you to get a lucky prize giveaway at the end of the month if we have more than 20 of y'all sending us an email to qualify for this particular lucky prize giveaway. All right, and of course, if you want to know more, do sign up for our class in February and join the early bird special. It's coming in at 12th of February in the midst of Chinese New Year, but yes, because it is at a time when the REITs are announcing their results, and as the sagacious REIT investors over the years, we have shown that if you are able to decipher the results well, what the results tell you, you are able to then position profitability in the REITs and avoid those REITs or avoid an episode where MLT is solar, this kind of episodes, which we warn in our classes. Okay, so let's move on to the AGM. Okay, now the AGM, there was, because of, and not surprising, because of the huge fall in the share price of MCT and Mapletree North Asia Trust, which I have highlighted in my previous video. To check it out over here, as well as in our YouTube video. A question that was being asked in the AGM, that is, are there any plans to merge MLT and Mapletree Industrial Trust? And what was the management or the managers' reply? They say that they have no plans to merge MLT and MLIT. Really? And do you, therefore, after the episode of MCT and MNAC, which in my previous video I've highlighted what's wrong with that merger, do you want to believe them? Okay, and to what degree, is this believable? You be the judge. Okay, I'm not judging whether you should or should not believe it, but I leave it up to you. Okay, now their manager believed that there's sufficient differentiation between MLT and MIT in terms of asset type, geography, and tenant profile, and they are both operating at a meaningful scale of individually and promising growth prospect in their respective sectors. Okay, so there's no compelling reason to merge. So take a step back, ladies and gentlemen. Ask yourself, the proposed MCT and Mapletree NAC, okay, does it mean that they already have sufficient differentiation? After all, essentially, they both operate retail asset. One's Vivo City under MCT, and the other one's Festival Walk under Mapletree MNAC, right? So was there sufficient differentiation and yet there's still much? Okay, in terms of asset size, asset type, geography, and tenant profile. So you be the judge, because I think the woes that you saw in the MCT and Mapletree NNAC, is now gripped investors so badly that they have to ask MLT manager at the AGM whether there's any intention to merge with MLT and MIT. Now, the reasons I've given, is it sufficient? Is it sufficient for you to believe? I leave it up to you. Okay, right. So, but remember in our previous video, we did mention that when the episode of MLT came out, I did pick up an issue which I actually sent to the investor relations, right? And the reply I've got, which I've showed you in my previous video, is quite, I wouldn't say that is actually sufficient, but I leave that up to you to decide, right? Because I did highlight that when they actually went for the institutional placement at 188, as well as the private placement at 184, when the pro forma numbers were prepared at 192. That means it's a 4 cents and an 8 cents erosion based on their pro forma numbers that they work out. It means that the DPU have shrunk, the NAV shrunk, right? And the reply I got then wasn't satisfying because, I was more the fact that this information, the revised information based on the different pricing, should be made known to shareholders before they make and go to the ATM to subscribe for their private preferential offer, right? Not after, right? Okay, and this is what, finally we have an answer from them, but this is only after the offer has been taken. And of course, you have subscribed even at the preferential at 1.84 based on last week low at 174, you would have lost money, ladies and gentlemen. Okay, so let's move on. You can see that finally they did reply and they did confirm my earlier suspicion. And that is from the minutes of the AGM. They say that based on the issue price of 188, right, for the placement and 184 for the preferential offer, the pro forma DPU is only 1%. So, ladies and gentlemen, if I read my book, that is actually Making Your Millions in REITs. And yes, ladies and gentlemen, if you're wondering what is this is a Chinese edition, that's being published by Stick Media, which you can get in China currently, in Chinese of my book. So this is the English version, and this is the Chinese version. In my book, be it the English version or the Chinese version, I've warned that we as investors, something that you can guide you against questionable acquisitions and deals by REITs. Okay, one of the hallmark is that the DPU accretion is really very minuscule. Correct, and 1.1%. Leave it up to you to judge whether it is actually very minuscule. There's very little positive impact for shareholders. And considering the risk of $1 billion, is it actually worth taking that risk? So once again, ladies and gentlemen, today's video, I hope you enjoy it. We help you to assess the risk when it comes to investing in REITs. And once again, like what you see, please like and subscribe, recommend a friend, email us at gcpglobalsg@gmail.com so that you stand a chance to win a prize giveaway at the end of the month if we do have more than 20 of your subscribing and emailing us at the same time. And do join us for our class on 12th of February, where we will actually guide you further and warn you of basically future episodes and what we saw on MLT. And I hope you actually enjoy the email exchange I actually had with one of our UK investor, Mr. Adrian Fletcher. And once again, thank you so much, ladies and gentlemen, for your questions, because it helps us to grow, understand the REIT better, and most importantly, to make you a better investor, make you more money in a year of the time. Once again,